US business. And I think our scale in the US business, which is Cipla scale, is not at the same level that the others had. So when you reach a certain scale in the US, and with the high competitive intensity there, the pain has been immense for many players, us included, because of the pricing pressure that's happened there. But look around and see what's happening in India. It's just phenomenal. I think there's just this incredible deepening, and India-based companies which have high revenue out of India have done really well, right? And even if you look at our peer set, India businesses are moving really fast. So I actually think that there's a shifting in where consumption is happening, where the last 10 or 15 years the consumption happened in the US. We're now at a stage where a lot of the emerging markets are now having high consumption sectors. So India is one, China is the other. We think that the Philippines, Vietnam, Indonesia, Africa, these will emerge as new places where healthcare will shift, right? So depending on various points in time, you will see this shift happening in the world. So we're very excited about how India is growing as a market.
So the puck has moved. It's not only for stock market investors, it's only for pharma companies also the puck has moved.
Yes, and absolutely. I think that the new centers of consumption are becoming the emerging markets. Yeah.
Are we too early in calling this trend? And the reason why perhaps I'm asking you this is, look at the per capita spend in India versus per capita spend in US. We are an iota of what the Americans are spending. So when you're calling out this mega trend that the center of gravity for pharma companies like Cipla is moving, what is the basis of this?
So I think the basis of this is just it's no different than the domestic consumption theme, right, that is playing out today in India. So every time I speak to the FMCG companies, they tell me about how demand's increasing in the tier 2 to 6 towns. And if you look at India, we are really at a very nascent stage in our healthcare. A lot of our consumption happens in our metros and tier 1 cities. The best hospitals are there, everything seems to be there. Now the government's announced this Ayushman Bharat scheme, right? Every family gets 5 lakhs. I see hospitals now talking about setting smaller centers in the interiors, tier 2 to 6 towns. And I think that's where we think consumption is going to shift. So for us, our tier 2 to 6 towns are actually growing at the rate of almost 300, 400 basis points more than the metros and tier 1s. So there's an incredible deepening of this healthcare system. I think in the metros and tier 1s, Nikunj, let's go back 10 years. We used to talk about stents as a really big thing, right? Somebody had a problem with the heart, a stent, it was considered a big thing. Today, there are just so many stent centers all over metros, tier 1s. In fact, tier 2 towns now have it. Valve surgeries, we're all living longer, right? So all of this was earlier used to only happen in the West. It's now coming back into India. Oncology is another great indication, right? I think the level of cancer care in India and the treatment rates are as successful here as much as they are outside in the West. So I just think that as we live longer, I just think that as awareness grows, this is a big shift we are seeing. And then COVID, right? So when COVID came, a lot of us became very interested in wellness. We suddenly realized it's so important to stay healthy that what we were ignoring to invest in earlier has now become, I myself went and got a Fitbit watch just to make sure that I was moving enough, that I was sleeping enough, right? And we see this manifestation across many people, right? Multivitamin sales are up, people are conscious about what they eat, tracking what they're doing, and they want to be reached about their health. So, whether it's digital or otherwise, it's just this whole deepening phenomena that we see in India.
Okay. So I completely understand that awareness, ability, and perhaps distribution are some of the factors which will increase the Indian pharma penetration. But then historically, Indian markets are governed by price controls. You spoke about stent. Well, guess what? There was a price control.
Yes.
There. We know that the number of drugs in the DPCO list, that's always a changing number. So isn't that the biggest risk for a market where potential is large, but for a pharma company, if you're selling and if you're not compensated, then it's a no-go?
I would agree. And I think the only thing that I would like to say here is that every time India is this huge price-sensitive market, every time price has come down, volumes have shot up. So in the overall equation, you may lose 200, 300 basis points, but you gain a huge amount of volume. So I think one is just the expansion of the DPCO, and pharma has been in that DPCO framework pretty much for the last 20 years. But I think if even the stent example is great. Just look at how many centers have come up. Now, somebody may question saying, the price of stent reduced, was it as economical for patients? Yes. As economical for centers? Yes, because look at the number of centers that have come up. So I think this demand and volume thesis of India, the 1.5 billion people we have, is something that, it's again the same bottom of the pyramid, what we lies at the bottom. I think there's tremendous opportunity there.
So guys, we're just getting warmed up with the first part of our interaction with Umang. Now we move from outside the building to inside the building to understand the real process. But I would say in this case, the chemistry involved in how Cipla over the years has managed to do breakthrough work in making things which are complex and produce simple and extraordinary results. So we are now in the R&D center, and tell us about this place.
So this is our API R&D analytical lab. Okay. So what we do here is that we start with the APIs, we try and synthesize them, analyze them for impurities, and we try and create for them a structure which is similar to the structure of products that are sold in the market. So we have, this is pretty, so once you make the product, you also have to make sure that your methods are able to catch if there is any variation that's happening in the product.
So we're actually stepping into what could be called as a Cipla R&D lab.
Yes.
Oh, wow. This is first time for me.
Yeah.
It's beautiful.
Yeah. So it's, we try and, the labs, we try and make sure that our labs are not as crowded, and we try and create centers where people can exchange thoughts. So this is, if you look through, we have, and we want to create more transparency across all our boundaries, and we want an environment where people feel good to work with each other.
When COVID happened, US FDA went on a back foot. They did not have time, ability or capability to inspect. But COVID goes down, US FDA inspection goes higher. Do you see a lot of changes which are permanent in nature from the US FDA front post-COVID?
Well, I think the observations will make everybody improve their processes, right? And one of the things that the FDA does really well is to be able to get the industry to move to a level that is expected of them as things become more complicated. So once the nitrosamine impurities came, the FDA came out with some of the analysis that they wanted companies to perform, and processes and methods and equipment keep getting to the next level. So what we did here 10 years back versus what we are doing here today, there's a lot of difference in just how we try and characterize a product for the same level of impurity, same level of composition compared to the main product.
US market, why is it getting increasingly complex to talk about a trend there? Generic pharma like commodity should follow a price trend. But incrementally we've seen that every company has a different story to sell. So is it important to get the product right and importantly the cycle right also?
I think the product cycle you can't time because the market is responsive to the number of people who are playing in it. I think the US is a highly consolidated market. I think among the markets in the world, 3 customers or 4 customers having bulk of the environment it's a really highly concentrated market. So now look at it, we are at least 40, 100, 60 Indian companies, but 3 or 4 major buyers in the US. So I think the equation is distorted. But also it's a function of how your base becomes bigger, your innovation engine needs to work much harder to offset the price erosion, right? So if the base is 500, which is where Cipla used to be, you have to work hard to offset 50 million of price erosion. If the base is $1 billion, you're working harder to offset 100 million of price erosion. So, you can't set up these centers overnight and you have to be conscious about what products you're picking up. So I think that's the story of the US. But look at the India market. The volumes go up significantly. I think it makes so much of a difference in terms of the number of, where volume growth is significant, right? It makes it easier for innovation to keep growing.
Is the US generic market more like an Indian telecom market where price keeps on coming lower and lower? The size will increase, the reach will increase, your volumes will grow, but the margins you will command would be always under pressure.
Well, you could say that. You could say that depending on a product, suddenly your product margin improves. because you have an opportunity to come in
That's a
early.
big statement.
Yeah, in the sense that if you have one product where you're exclusive, telecom has less exclusivity. If you have one, you might be $1 billion in the US, and you suddenly have a product which can get you 500 million. So you go up, and over a period your trend goes up. But I'd like us to just introduce a small tweak to it. The telecom story, growth story in India on volume has always been higher than 10, 12, 15, sometimes 20. In the US, that growth is, other than when the product goes off patent, is usually 1 or 2%. Okay. Right? So that's why you feel it more, because when price goes down, the offsetting volume for you is roughly about 2% or 3% once the product is already generic. So it's not exactly like telecom. Telecom in India is still showing huge growth, even though price is deflating.
So let's look at the three important yardsticks. The short term for Cipla, the medium term for Cipla, and the long term for Cipla. Short term, when we spoke to you last, you were very excited about the US inhaler launches, the Albuterol family and what they've done. So what happens in the short term? What's the trigger for Cipla now?
So the short term, Nikunj, we are looking at, and I'd say short to medium term.
We are talking about 12 to 18 months.
12 to 18 months. So
that's
we
medium
have,
term.
yeah, which means, let's say short term is now to 18 months, and medium term is a little bit
3 to 5 years.
3 to 5 years. So medium term, most of what we will launch has already been developed. Okay. Right? So either we are successful in getting an approval or we are not. And I think we have the inhaler families, we have the complex injectables that we are after, and we have certain wellness categories that we are after. So I think those have been lined up both for Europe and for the US. And the India growth story will hopefully continue from a volume perspective. Medium term, what we are attempting to do is to create 40-50% of our revenues which stays as limited competition, and that comes out of respiratory or inhalation, which is today is about 28% of the company's revenues.
That's a mainstay.
That's mainstay. We want it to be closer to 35, right? So the launches would help us and get us there. Then there is the complex injectables. That's roughly about 5-7% of the revenue. We want that to get to 10. And then you have wellness, which is about 9% of today's revenues. We want it to be higher than 15. So it's a tall ask from where what we want to do. So if you add, wellness in an ideal state, wellness at 15, respiratory at 35, injectables at 10, we're looking at about 60% of the company's revenue coming from places which are not as competitive.
And when you say non-competitive, this is higher than the current aggregate margin of 20%. I'm using 20% as the base.
That is correct.
So the 60% what you'll get in the next 3 to 5 years will be higher than the threshold
higher
margin.
than our threshold margin, right? And then, because of the moat we have, let's say in India or in South Africa or some of the emerging markets of the world in terms of our reach and distribution, the regular portfolio and the market growth also becomes some kind of a competitive advantage. So that's our overall medium-term strategy. And I think between medium and long-term, we are looking at being able to get to more innovation, right? And so India, we have realized that whenever you innovate in India, for India, you eventually begin to see the market. Biosimilars came, we have a new biosimilar engine. We're looking at mRNA as an opportunity. We're looking at CAR-T, right? So we're examining all those innovations that can come to India and create a huge amount of value for our patients.
Okay. So now we hop across to the next lab.
Let's go.
So we go from a complex lab to an ultra complex lab.
Let's go there. Let's go there. All labs are complex. If you're not a scientist, all labs
everything
are complex.
is complex. I'm going to ask you a very basic and a fundamental question. Cipla is migrating towards better products, higher margin businesses. But you have an emerging market business, the Africa business. And looking at the understanding, at least my understanding of that market and the efficiency of that market, that will always be high volume, low margin. What is the necessity for Cipla to be in that spectrum at all?
No, I think great question, Nikunj. The company started with the foundation of access. Yeah. Right? Dr. Hamid's vision was that we must be a company that offers access everywhere. And I think we've reached a point that we've redefined that access to say access access where there are no solutions available. So if there are 15 people satisfying a certain market, right, then it's not an access problem anymore. Right? It might be a price problem, but not an access problem. So what we are trying to do is get into areas, whether it's Africa, whether it's Asia, where we can bring something that benefits people because they're not getting treatment. Right? So yesterday's HIV may actually be tomorrow's oncology. Right? And so that's how we define access. So it's very interesting you asked this question. Sometime back we started partnering with the MNCs. And the MNCs would come and ask me saying, Dr. Hamid fought for patents, the not having patents, and you're partnering with MNCs. And I said, no, because this is completely synchronous with the vision of Cipla, which is to create access. The reason we fought patents was because we wanted more people to have product in India.
All right, there you have it, getting an in-depth ringside view as to how things operate and run at Cipla. That's CEO at Work with Nikunj Dalmia as well as